Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Well, the recipe is in for our markets to start in the red today. As we've been talking in the headlines as well, the global setup is not looking so good. So let's take a look at the Asian markets first. Deep red for most of the indices. The Hang Seng index is down 2.5%. It has extended those losses. The Taiwanese index down 2.1%. Nikkei, Kospi, all of them are under pressure, down about 1.5%. The Bank of Japan said it would conduct emergency bond buying operations to contain rising yields. Yen is inching towards 150 against the US dollar, which is another 32-year low. So across the board, there are negative cues which are indicating that the start for our own markets could be in the red. SGX Nifty is indicating a downtick of 131 points. Let's talk about the US markets now. Wall Street snapped a two-day winning streak and ended Wednesday's trading session lower, with the Dow Jones down 99 points, the S&P 500 24 points, and the Nasdaq Composite closing with a 91-point cut. CNBC's Sarah Eisen gets the wrap of all the action on Wall Street.
Stocks struggled today, closing out lower across the board as Wall Street couldn't extend its rally despite another strong batch of corporate earnings. The Dow slipped around 99 points, or 0.3%. The broader S&P 500 ticked down a little more than 0.6%, and the tech-heavy Nasdaq lost more than 0.8%. Snap rose after Citigroup added a positive catalyst to watch on the social media stock heading into its earnings results Thursday. The firm said Snap's revenue is likely to be better than expectations due to improving advertising environment. Netflix, one of the big winners on the day, the stock tacked on nearly 13% following a strong earnings beat late Tuesday. The streamer added more than double the new subscriber numbers that Wall Street was expecting last quarter. Meanwhile, shares of United Airlines also jumping following an earnings beat late Tuesday, with a strong report showing consumers continue to spend on travel. That's the action from the U.S. market. Back to you in Mumbai.
Okay, a lot of updates from the US markets. Thanks a lot for that. On to a key update on the Fed's Beige Book. The summary of the economic conditions across the 12 Federal Reserve districts, which says the US economy expanded modestly and inflation remains elevated. CNBC's Steve Lisman wraps up all the highlights for us.
Very mixed Beige Book where they said economic activity expanded modestly. That's actually an upgrade from the prior Beige Book. This collection of anecdotes from the 12 Federal Reserve districts had previously said economic activity is unchanged. Now it's saying that it grew modestly. 4 districts said activity was flat. 2 said there were cited declines due to high interest rates, supply and disruptions. Retail spending was relatively flat across many districts. Auto dealers among those saying that sales were sluggish. Part of it was limited inventories along with higher prices. One bright spot standing out with unequivocal language: travel and tourist activity rose strongly. And you know that's true with the planes being full all over the place. Now, this is interesting as well. Manufacturing held steady due to easing supply chain restrictions. And we haven't heard that in a while, so that's pretty good news. However, back to the bad side of things. I told you this was back and forth. Rising mortgage rates and elevated home prices did weaken housing starts quite substantially. Employment rising at a moderate pace, but there was some cooling reported in labor demand across some of the districts. There were scattered mentions as well of hiring freezes, but labor market conditions overall were said to be tight. Some businesses said wages were rising due to inflation as well as labor tightness. Wage growth overall was expected to continue. On the prices front, they remain elevated. Some easing noted across several districts. Significant input price increases were reported in a variety of industries. And then again, this kind of contradiction. Solid pricing power reported, but also some consumer pushback. Overall, expectations for price increases were that they would generally moderate over time. So I don't know, guys, maybe a touch of progress here in the fight against inflation with some comments about supply disruptions easing, but you don't want to take it too far because the other side of that story is still also mentioned quite a bit in this report.
Okay, inflation continues to be elevated. That's the update from the Fed's Beige Book. In fact, let us also listen to Minneapolis Fed President Neil Kashkari had to say on the rate hike trajectory. Listen in.
The problem for me with trying to say, hey, it's time to pause, is we're not even sure that we've got rates high enough to push services inflation down. So until I see some compelling evidence that core inflation and services inflation have at least peaked, I'm not going to be ready to declare a pause.
Okay, with that, let's get you the final update on our global market wrap this morning. European markets also ended Wednesday's trading session lower, with the French CAC down 26 points, the German DAX 24 points lower, and the British FTSE closing with a 11-point cut. The sterling came under pressure after a hotter than expected UK inflation print. The UK Consumer Price Index rose 10.1%, hitting a 40-year high in September, a little above the estimated 10%. Increasing food, transport, and energy prices were the biggest contributing factors. Political volatility in the UK continues, with Prime Minister Liz Truss defiant amid calls from the opposition to step down after her economic plans push Britain further into turmoil. Meanwhile, Suella Braverman stepped down as the UK Home Secretary last evening over data breaches, even as she flagged concerns over the direction of the present government. Okay, a lot of updates in the global markets. So let's do one thing. Let's talk about how will these overnight cues impact our own markets. We have our research team joining as always to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first. What is the market setup looking like today?
Well, good morning. After 2 days where we actually had quite a bit of a strong handover from global markets, today is a very subdued, in fact, a negative handover coming in. Like you mentioned earlier, most of the US markets ended in the red with, surging treasury yields, one of the key reasons why we actually saw such a negative outflow. Important also keep track that Tesla actually declared its results where revenues were above the estimates, but when you're talking about the bottom line was a little bit of a significant miss, and which is why you actually saw quite a bit of a drop as far as Tesla is concerned in the extended hours. UK also saw, extended and heightened inflation worries, and which is why most of the European markets also ended in the red. Now, when you're coming across to gold prices that actually eased, 2 days ago, once again was down. And when you're talking about, gold prices went down a little over 1% on the back of worries of both dollar as well as the yield. When you're talking about crude prices actually saw quite a bit of a significant gain. WTI futures went up over 3%, and when you're talking about Brent futures, also ended higher by over 2%. Now remember, Indian markets mainly tracking Q2 results, whole host of results that came yesterday. The stocks will react today, and today some very important results like ITC, Asian Paints, Axis Bank, Bajaj Finance and Tata Consumer will be on the radar as far as trading desks are concerned. Also important to track, remember yesterday Indian markets ended significantly off highs on the back of the weaker rupee, so that will be another important cue to keep an eye out for. Asian markets have taken the weak handover, and LGX Nifty is also indicating a significant discount as far as the Indian markets are concerned.
Yes, looks like a day in the red. Vivek, thank you so much for all those cues. Now, Surbhi is joining us. There will be some stocks that will be in focus as well. Surbhi, which ones are those?
Few stocks that are on my watch list today. The first one is AU Small Finance Bank, where sharp rise in yields and CASA growth drove beat on estimates. CASA ratio was at 42.3% versus 30% same time last year. IndusInd Bank also beats estimates. NIM at a 9-quarter high, and return ratios are the best in 11 quarters. Home First Finance, where disbursals and AUM both are up 36% on a year-on-year basis. Max Financial Services also reported strong VNB margins, but was muted on the growth front. VNB margins were up 210 basis points at 31.3%. Naveen Fluorine earnings were lower than estimate. Margins declined due to high raw material prices. DCM Shriram also saw weak numbers on a year-on-year basis, led by vinyl business and losses in the sugar segment. Lastly, Nippon Life AMC, where the revenue was up 5% sequentially and yields were at 0.47%. Few more stocks that might react to their numbers: Shoppers Stop, Metro, Havells and Inox all reported their earnings post-market yesterday. And lastly, quite a few numbers that are coming out today: Asian Paints, Axis Bank, Bajaj Finance, ITC, United Breweries, Tata Consumer and Colgate. So we will be keeping an eye out for all of them today.
Okay, that is a long list, a lot of earnings which are expected today. Thanks a lot for that, Surbhi. Finally, let me go across to Manglam, joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So yesterday, in the last hour of trade, a sharp sell-off in the rupee actually caused a fair amount of volatility in the equity markets as well. And as a result of which, both the Nifty as well as the Nifty Bank fell about 100 and 270 points from their highs respectively. And now the SGX Nifty, on account of weak global cues, is indicating that the cut could be anywhere between 100 to 140 points at the open itself. And the FIs were positioning for that yesterday as well, because the Nifty October futures actually turned into a discount of 17 points versus a premium of 15 points during the day itself. And then we saw net inflows in the cash market. While they were positive, they were lower than what we've seen over the last 3 trading sessions. And institutional flows, the gross institutional volumes too, were slightly on the lower side. But back to the point on index futures, the FIs have positioned themselves for some weakness. They added close to around 4,000 short contracts as against 1,500 long contracts, and as a result of which their short contract still remains at 70-odd%. It is weekly options expiry today, and the FIs have positioned for weakness because, you know, they've bought twice the number of puts as calls, close to around 1 lakh puts bought as against 50,000 calls. And on the way up, there is congestion, and that's why they've sold twice the number of calls as against the number of puts that they've sold. 71,000 calls sold against 31,000 puts. Where have the calls been sold? 17,600. That corresponds with yesterday's high. So that is a difficult mark to cross. And with the SGX Nifty indicating a weakness, maybe the 50-day moving average comes into play as a stiff resistance at around that 17,500 odd mark. On the way down, we will be watching for some support coming by at the 20-day moving average, which comes in at 17,200. But the point is that dips are being bought into this market. Any dip towards that 17,200 mark should be a buying opportunity.
Welcome back. You're still tuned into Power Breakfast. Well, IndusInd Bank's second quarter numbers, they beat estimates with net interest margins coming in at a 9-quarter high. Abhishek Kothari is here to tell us more.
Well, records continue to gather at IndusInd Bank in terms of operating profit growth, both YOY and quarter-on-quarter. It's perhaps the only bank to see a consistent growth over there, both YOY and quarter-on-quarter for 8 quarters in a row. The net interest margin is at 9-quarter high of 4.24%. This compares to 4.21% in the previous quarter. Return ratios on account of lower credit cost are one of the best in last 11 quarters, with ROA at 1.8% and ROE around 14.5%. So RWA to advances, a key measure of the risk in the balance sheet, has come down to below 120%, perhaps one of the best that you are seeing in last 11 quarters. So YOY, the loan growth is best in 11 quarters, and quarter-on-quarter, the loan growth is one of the best, in last few quarters. Hence, NII growth has been pretty strong, much ahead of our estimate. Now, slippages have come down. Slippage ratio is at just 2.42%, one of the lowest that you are seeing in last 12 quarters. So gross NPA ratio has also improved to 2.11% versus 2.35% in the previous quarter, one of the lowest gross NPA ratio that you are seeing in last 4 quarters. So both the NII and the PAT are ahead of our poll. Back to you.
Okay, all right. So that's the update on IndusInd Bank. But the big update that we got towards close of the market yesterday is that the rupee hit a fresh record low against the dollar in yesterday's session, falling below the 83 per dollar mark. Lata Venkatesh is here to tell us more and what to make of this move. Lata?
Yes, 83 was a bit of a shock yesterday, and also the speed with which it got there. The broader reasons globally remain. You saw a big surge in US yields. The market basically getting a kind of confidence that like the BOE and the UK government, the institutions will step in, and therefore one shouldn't worry about excessive leverage. So there has been a risk-on rally for a few days. The bond yields and equities were in a risk-on mode, but yesterday we did see that translate into dollar strength and Asian currency weakness. Yen is heading towards 150 almost, and the Chinese yuan, especially the one traded in Hong Kong, is rushing towards 7.25. I mean, some near-term lows is what that currency. So it was also a pan-Asian backdrop. But in India, it looks like there was one specific flow which a foreign bank had to take out of the market. It was buying dollars. And, the expectation of the market, knowing that there is such a big buy that someone is going to do, a lot of people had put in stops at 82.30, 82.50, expecting that the Reserve Bank will come and supply and not allow the dollar to fall. But when Reserve Bank refused to come in, not only was this foreign bank buying, everybody's stops also got triggered. And there was a sudden fall from 82.30 all the way to 83 with Reserve Bank not in sight. It is unlikely that there will be a Wednesday-like fall in the days to come or today. But we must get used to probably lesser intervention by the Reserve Bank. Thursday's setup also looks like strong dollar and weaker Asian currencies. The Chinese yuan trading in Hong Kong is still at a pretty low mark, 7.27 as I speak. So there will be weakness today, but a Wednesday like fall is unlikely. The Reserve Bank, when it now has about reserves for 8 months of imports. At that level, it will start spending less, only on special days.
Spoken about the equity markets, the money markets, it's time to talk about commodities. Manisha Gupta is joining us with all the update. Good morning, Manisha. Some spike in crude oil prices.
Oh, well, yes, that wouldn't really support the money markets or the equity markets because it has been a 4% jump overnight for the crude oil prices. So just as we were inching below 90, we're standing again back at around $92.5 per barrel for crude oil prices. This is as the U.S. inventories have declined. Markets were anticipating a build-up in inventories, so quite a reverse has happened. And then apart from that, it is the 27 EU countries also meeting today for a second time in a fortnight, where the countries are expected to back an alternative price benchmark for LNG and joint gas buying as well. Of course, Germany and Netherlands are opposing a cap on Russian gas prices, so the expectation is that you wouldn't see a consensus being made today. And apart from that, the EU countries will also discuss emergency spending to counter effect from the energy crunch. So it can be quite an important meeting today that the markets will keep an eye on.
Okay, Manisha, thank you so much for joining us. So weaker global cues, weaker rupee, but strong crude. So looks like we will start a day in the red. Let's see which way things go from there. For now, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next with all the action.